This podcast is sponsored by the Center for International Business, Loyola University New Orleans College of Business.
Welcome to Gambo of Opportunities, the podcast where we dive deep into the landscape of international business with a closer look at the state of Louisiana and New Orleans. We will hear stories, insights, and strategies of influential global players of the Bayou region in a pursuit to make the Bayou one of the most attractive areas for businesses. This is Gambo of Opportunities. Hello everyone, I'm Alessandro Braga, and welcome to another episode of our podcast. Today we have the pleasure of interviewing Italian professor Paola Bongini. Paola is a full professor of banking and finance at the Department of Business and Law from the University of Milano Bicocca in Italy. She leads the undergraduate and graduate degree in banking, economics and finance, and she's a member of the University Research Committee. Her research interests include banking systems, financial regulation, financial institutions, and financial literacy. She's also an author of different books and articles on the two subjects that I just mentioned, and she has published a lot of articles in international academic journals, just to name a few: Journal of Banking and Finance, Sustainability, Journal of International Business and Social Science, Journal of Financial Management, among many others. She's also involved in several national and international research outreach projects in both financial and non-profit sector. Hello, Paola. It's a great pleasure to having you here to discuss about what is your experience in banking and finance. So this is a podcast about international business. So what I'm going to ask you is about, the intersection of finance and banking to international business.
Thank you very much for your invitation. Very pleased to be here.
We are pleased to having you here. So let's start right away with the first question. And so as a professor of finance and banking, what do you think are the current trends that you think are impacting international businesses? And in particular, how should international businesses adapt to these changes that you see? I mean, you are from Italy, so I guess we can also focus on the financial markets in the European Union.
Thank you for the question. As for the current trends that are impacting in international business and international finance, I would say that sustainability and cybersecurity are at present the most relevant issues that impact and will continue to impact international business. The EU continues to be very serious in its path towards carbon neutrality by 2030, 2050, which means that we want an economy with net zero greenhouse gas emissions. The recent election in the EU and, of course, in the US might change something in this, in the speed of the process, not in the process, I would think.
But I would hope so.
I would hope so as well. I think it is a train that has left the station, and it will be difficult to stop it. New jobs, new opportunities have been created. If you think, for example, the fact that large banks, at least large banks, will need to hire environmental engineer to analyze climate plans for their borrowers. This is a completely new job, a new path within the banking system. As for cybersecurity, this is number one issue for the whole world, where we are living in. We are marching towards a virtual world where we live. And our personal data are extremely relevant in this, invaluable in this real world. But it is not only that. All business are connected. And for instance, a month ago, an attack happened to a phone carrier, but it had spillover effect on banking system, on train, which could not leave the train station. So it is very important to think about cyber securities. As for the impact, one is to have all the necessary knowledge of the supply chain and the subcontractor, so that you not only know what is their environmental impact, which is important, but also whether they are exposed to cybersecurity attacks. So you might be perfectly safe in your organization, but then you have subcontractors throughout the supply chain which are not, and this has an impact on your activity. And then the second impact is the necessity to bring new expertise within the organization. So environmental engineer, for instance, data scientists, they have to be hired, but included in the organization in a way that the overall divisions and function can benefit from having this new expertise. They are not just apart from the overall organization. There is a need to have a spillover effect, positive spillover effect within the organization.
No, that's great. In particular, cybersecurity is something that really today is a priority for everyone, like you highlighted. In particular, I would say today, which technologies, AI systems are even more integrated into every business. I think about like a seminar that you just presented here at Loyola University in New Orleans, thinking about what is the intersection between finance, personal finance, and the digital era in which we are today. And so thinking about AI, what comes to my mind is that it's always so important now to look at all the aspects that AI can bring to a business, because we know that AI, the algorithms within AI are not fair, are not democratic.
May not be.
Well, yeah. May not be so integrating this new technology, new approach into businesses also require an additional step over, I think, an additional effort to guarantee that
the ethics.
That there is still ethics, there is this fairness in the provision of services, financial services, and so on. And so it's
in fact, the AI Act in the European Union is trying to provide this understanding and the need to think of ethical aspects of AI application. So this is a move towards more ethical AI applications.
Yeah, no, absolutely. Because I mean, listener cannot get this opportunity, but Paola presented recently a seminar masterclass at Loyola University, and she pointed out, in particular in the European Union, in Italy, she was saying that if you live in a place in which you still feel some level of digital divide because of your personal experience or because of lack of infrastructure, like in the mountain, you are in a position of disadvantage compared to your peers, to other customers, just because you cannot access specific services or you cannot have the infrastructure. You cannot enjoy the infrastructure for enjoying the same level of digital services, technological services, in particular banking services, financial services in general. So adding AI to this formula also may complicate things, but at some point, if you use AI to upload, to implement business analytics of your bank, of your financial services, and the AI says, no, it is not convenient for you to invest in that specific area, what do you do?
Yes, exactly. So this is a major challenge for banks, but in general for the overall business to correctly use AI. And then if you have seen, there are many philosophers in the ethics arena that are talking about AI and thinking clearly that it is not just an algorithm that can lead decisions.
Yeah.
We need to give the right input.
Yeah.
AI can have hallucinations as well. So this is what I've learned from my colleagues, data scientist colleagues with whom I'm working. And then there is a need to clearly structure the way the AI thinks, and then way AI can give you a solution. At the moment, we are in a situation where AI is still giving us some help in being more flexible, having more velocity in doing things. So, which is great. It enhances efficiency, reduce the cost of delivering products, and so on. But we have to be aware of the possibility that it can have distorted decision, can lead us to distorted decisions.
No, absolutely. So we discussed about the risks of AI, the risks, not the risks, but what cybersecurity entails, why cybersecurity is a major challenge for businesses. So let me ask you another question, even if though the answer sometimes is already been in what we were discussing so far, but what can be maybe other key financial risks that do businesses face when operating internationally, and how eventually can they effectively manage these risks to protect the investments and, of course, to protect the quality of financial services, financial products?
Yeah, there are two traditional financial risks that impact international business, which are currency or exchange rate risk and political risk. Exchange rate risk arises when from differences, changes in price of one currency in relation to another, and it is usually dealt with derivatives. So it is just a traditional financial risk for international business. So, and it is through derivatives, sort of an easy peasy way of managing it. It will be interesting to see whether the project of the European Union digital, the central bank digital currency will bring differences in this way of managing payment system and exchange rate risk. The US have already resisted the idea of having their own central bank digital currency, but the new administration is also endorsing cryptocurrency. So we will see whether even in this traditional risk, other risk may arise. As for geopolitical risk, again, it is well-known risk for international business, more known in the less advanced economies when you go abroad in Latin America or Eastern Europe or some emerging country in Asia, less known with respect to more advanced economies like could be Israel or Russia. But this is an issue more than present, and it cannot be dealt with derivatives or other things like that, or insurance policies. So the businesses have to have put in practice enterprise risk management and crisis management board that were so important during the COVID crisis. So even in health crisis demonstrated the need to have proper enterprise risk management into practice, and also to use extensively the what-if scenarios analysis whenever planning, whenever budgeting in the business.
Yeah, no, absolutely. Thank you. In particular, yeah, if any of my students is listening to this podcast, to this episode, how much is stressed during the course, the importance of analyzing political scenarios, analyzing political risks when in a situation of international business that decide to enter new markets, and how important it is to consider the advantages of a new location in terms of factors of production, in terms of the presence of cheap labor,
new clients,
new clients, and so on, but also to compensate it with the sometimes the invisible cost connected to political risk, connected to maybe to assist exactly to a supply chain that may be completely different from the way that is set up in your headquarters, and therefore also the idea of being in a new system in which the economic system and political system may go hands by hands, and not being that freely like we were supposed to, where it's supposed to be, or what
we are used to.
Yeah, we are used to, or what we expect to be. So, so thank you for pointing out the same concept, but from more a financial perspective and risk management perspective. Now, what I'd like to do in the second part of this interview is to also explore what is your second big topic for which you are teaching, from which you are developing very interesting academic outputs. And I'm referring in particular to personal finance. Let's clarify what do you mean by personal finance? What does it mean to talk about personal finance? Why it is so important to sensitize people, but also institutions, about discussing personal finance?
Yes, I could talk hours, but I'll try to summarize.
Well, you can take as much time as you want.
Okay. Personal finance has to do with our everyday life, managing money wisely. That is making ends meet without using that to cover our expenses, setting goals in a smart way so that we are able to have specific, measurable, attainable, realistic, and timely defined goals, and provided the financial resources to achieve this goal. This is the main issue. So thinking of rainy days and the need to have financial resources to absorb financial shocks, which could be just a teeth that is broken and you have to go to the doctor, or your washing machine that is broken and you need to repair it. And then, of course, be prepared to face them. So personal finance is not something that is there to teach you how to be rich. The idea is to have a personal finance program to achieve financial well-being. And again, financial well-being does not mean being rich. You can be a rich person, but then you have living expenses that are even greater than your very large income, and then you end up in a bad situation. You are in a situation where you can waste your wealth. And I think that there are many examples within, singers and very famous people who were very rich but ended up being poor. So not being a financial wellness.
Yeah, it's like saying not being sustainable in your own budget for your everyday life.
Exactly. So sustainability returns not only environmental but also
we can use the term for many ways.
Exactly. So I would say that personal finance should be made of three pillars: budgeting, insure for financial shocks, and then plan to achieve your life goal. And then this life goal to be achieved needs financial resources, which could come from savings, investment, and debt. Wise debt, of course.
Thank you so much. And I think in particular this second part of our interview is very useful for our students, and not just for our students, of course, for every student, for every young person that is starting to deal with financial independence and so on, which they find themselves in a situation of having the need to make financial decisions in their life. Picking up from what you have said, in your opinion, how does personal finance differ across different cultures, across different economies, across different nations, and what should institutions, but we can focus on higher education institutions, do to reduce differences, to reduce what earlier we discussed about digital divide. Here we can discuss about cultural divide, or even
age
personal
divide.
Finance divide, between regions, and therefore improving the overall financial literacy.
Thank you for your question, which is very dear to me. Different cultures have different approach to money matters, and also specifically with respect to debt. This is very important. That is a decision that could be very difficult for different cultures because of religious matters, religious traditions, but also because of the stigma that within the environment where they live is given to debt. In other countries, this is not an issue. It's normal to be indebted, and it is fine. Or you can see that different countries have different saving rates. Japan and Italy are well known for having very high saving rates for cultural reasons, for historical reasons, while the US can be seen as sort of a laggard in the saving rates. Other countries have a different disposition to cash. Germans love cash, want to use cash, probably because of the high inflation period that they experienced many years ago, centuries ago, but then it's still there, the fear of high inflation, so they need to load cash. We said that religion matters too. It has an impact in the decision to be indebted. So Catholic have already seen that as a sin, but also Islamic finance is something different. For them, it is the banking, as we know, it is a sin. So they encourage partnership. So the bank are more like a venture capital institution. So we need to consider when we define at school, like the university, programs for financial education, all these differences. Cultural differences, the religion differences, also the different religion belief, age differences also can be important. And my advice is to have a sociologist within the group who design the financial education program so that we are aware of the differences and we accept them, we know them, and we can make example that can be accepted by the audience. So the audience needs to see that you are not just using a one-size-fits-all program.
Yeah, the
Western white approach. Okay?
Exactly.
Needs to realize that there are differences, that those who are running the programs know them, accept them, and try to challenge if they need to be challenged, or take the good part of the cultural or religion belief that could be important to increase financial well-being. Yeah. So there is not one way to increase it.
No, absolutely not suppressing the differences, but also using the differences to learn everyone, to learn about differences and to start appreciating the differences. Because I agree absolutely with you, that could also be like a very important factor that once then we start moving into international businesses in different position, of course, but when we are in a position of management and we need to deal with different subsidies, with different business units around the world, we have to make sure that we know who we are dealing with and how we can then change, modify, and adapt our communication, our decisions based on what you were saying. The cultural differences, religion differences, and so on. I have one last question for you that, in my opinion, kind of maybe close this circle that we are developing about, on one side, financial management, risks management, and on the other side, personal finance, which is, in one of your recent work, you kind of presented this idea of moving from the concept of financial literacy towards a different, maybe not entirely different, but like a more complex and more sophisticated concept of financial capability. Can you explain the difference to the listeners, and what would it entail to move from financial literacy to financial capability approach?
Thank you for this last question that is very important. I think it is very important to understand that it is not only that we need to improve financial literacy of individuals, but also to let them be able to, act and use their knowledge in a proper way. Financial capacity is a concept that entails financial literacy, so the individual knowledge, but also it considers the possibility that this knowledge can be put into practice. It is made of two pillars: the ability to act, which is an internal knowledge, the skill, the confidence that an individual may have, and this can be increased by financial education. But then it is also made of the opportunity to act, so the possibility that the individual can put this knowledge into practice, into a savvy behavior. So external condition matters as well, so financial inclusion. So I think that financial capability is made of financial literacy, the knowledge, and financial inclusion, so the possibility to find the right product, find the right service that is matched with the need of the person. So in a way, we have the ability to act, which is the ability to obtain financial information, the ability to comprehend this financial information, so understand the information that is given, the ability to evaluate the information, to check between different financial options that are there. But then there should be also the possibility to find this different financial option. We need conditions which could be regulations, that it could be policy decision to have the possibility to for the individual to find the right product for the needs, which also include the access, which is physical access to these products. And we return back to what we were saying about the digital divide. Most of the banks are now moving towards the digital offering. So we will need also individuals which are not only financially literate, but digitally financially literate to address, to use comfortably all these different digital financial products.
That's perfect. Thank you so much, Paola. Let me remind all of the listeners that at Loyola University we are developing personal finance course. Well, at this present time we have a personal finance course as a honor for the honors, but also at the university level we are working with the QEP committee, Quality Enhancement Program committee, to work for enlarging the offering of financial literacy programs to all students at the campus, but also with the possibility to open up the offering to also the community as well, because of what Paola is talking with us today, and the importance of having a widespread financial literacy and capacity for all the community. So with that, I would like to thank you, Paola. Thank you so much for being here
You're welcome.
Pointing out this important discourse about what are financial management risks management for international businesses, and also pointing out the importance of personal finance for both students, but for also, let's say, all the community, because personal finance today impact everyone here on planet Earth. Thank you again, Paola, for being here today.
Welcome. It was a pleasure.
Thank you for listening to Gamble of Opportunities, the podcast about international business of Southern Louisiana and New Orleans. Huge thanks to Farah, Oban, and all the staff involved for making this podcast possible.